CPI numbers for 2021, 7% is where we ended up. The highest reading since 1982. And of course, if we still measured consumer prices using the same CPI that we had in 1982, it would have been about 15%, the worst year ever for inflation. Well, today I want to start off talking about the producer prices because on Thursday we got the December numbers. And in fact, this number was actually up a little less than estimates on the headline. They were looking for an increase of 0.4, which would have followed 0.8 for the prior month. Now, the prior month, November, was actually revised upward to 1%, but we only got a 0.2% increase for December. And so that meant that the year-over-year increase was 9.7%, which was higher than the 9.6% year-over-year number for November, but slightly below the 9.8% that had been estimated. But the main reason for the smaller than expected rise was a big drop in gasoline prices that really held down the number. In fact, if you X out gas prices and just look at the core, there we came out at up 0.5, which met expectations, and with an upward revision to November from 0.7 to 0.9, the year-over-year core PPI rose by 8.3% versus 7.7 in the November month and ahead of the 8% that had been estimated. So overall, I think this number was a bit hotter than expected, despite the fact that the headline number missed. But if you look at what's happened to oil prices so far this year, we've got an 11% increase in oil prices in the last 2 weeks. That is a big move. That is going to really push up gasoline prices in January. And so I think we're going to see a big print for January that's going to totally erase the fact that we got a lower than expected number in December. And I think a lot of the traders recognize that. And so that's why they're dismissing that number, realizing that, the real number is hotter due to this surge in oil prices, which looks like it's going to continue. In fact, oil prices closed above $83 a barrel on the week. In fact, oil was up 6.2% this week alone. And if you look at that chart, it is very, very powerful. I think we're going to take out the high, which is 85, I think, and change. I think we're going to take that out next week, and we're going to be north of $100 a barrel, I think, this quarter. And if not, then maybe by the first half of the year. But I think more likely in Q1, we'll be looking at $100 oil, and we may be closer to $150 a barrel by the end of the year than $100. And next year, I expect an all-time record high in the price of oil above $150 a barrel. So all of this is a tailwind for inflation, which means it's a big headwind for the economy. But again, also look at the delta between producer prices and consumer prices, where we have 9.7% increase in producer prices, but only a 7% increase in consumer prices. Consumers have been spared the full wrath of inflation because producers have been eating some of those price increases and not passing them on. But as I was saying all last year, I expect that to change this year because businesses need to recoup their costs. They need to protect their margins. And I think we're going to see businesses trying to catch up on the ground that they lost last year, which means consumers are in for an even bigger bout of inflation this year than last year. In fact, already, I think it was yesterday on Friday, Netflix announced an 11% increase effective immediately in their prices. I also read that Sherwin-Williams was increasing the prices of their products by 12%. Again, these are big price announcements early in 2022, which is exactly what I was saying to expect last year. But it's not just that inflation is speeding up, but the economy is already slowing down. Look at the numbers that we got on Friday. First, we got the consumer sentiment numbers. Last month, we were at 70.6. The consensus was for a slight drop to 70.4. Instead, we plunged down to 68.8. And the reason for the pessimism is surging inflation expectations. Consumers now expect inflation at 3.1%. That's the highest in 11 years. But the reality is it's going to be a lot higher than 3.1%. Imagine how much lower consumer sentiment would be if consumers actually realized how much worse things are going to get. In fact, buying conditions for vehicles crashed during the month to an all-time record low. Why is that? Well, vehicle prices are really rising. And obviously, the higher the price of vehicles, the less likely it is that people can afford to buy one. And it's not just new vehicles, but used vehicles are getting more expensive. And I expect that trend to continue and maybe even accelerate. We'll see in 2022. But the real shocker was the December retail sales number. Retail sales were expected to be flat in the month of December, and that was going to follow a 0.3% rise in November. Well, the 0.3% increase was revised lower slightly to 0.2, but the December number collapsed minus 1.9%. Blowing away even the lower range of the consensus, which went from a high of up 0.7 to a low of minus 0.6, minus 1.9, well below the minus 6. And in fact, it gets worse when you X out vehicles. There, we were supposed to go up 0.3. Instead, we went down 2.3. And in fact, they even revised the November number, which was up 0.3. Now that's up just 0.1. And if you X out vehicles and gasoline, the drop was 2.5% versus an up 0.2% estimate. And the prior month's increase of 0.2, that was revised to a negative 0.1. These are horrible numbers. They're going to take a big chunk out of Q4 GDP because remember, 70% plus of that GDP number is consumer spending. And if retail sales are collapsing, obviously so is consumer spending. And so growth is going to be lower than what had been forecast, while inflation is going to be higher. Stagflation is where we're headed.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.